Russia has dumped the US dollar yet again. You came here for the truth, so let me unveil that for you. Today, I want to begin by talking about the Federal Reserve. Going to give you some updates on that. We are going to next look at the US dollar and what has been happening. It's so important to follow this. And then we need to discuss taxes. We can see that these have been increased. And of course, they're pushing for more. And then I want to discuss, of course, the job situation. This is really key and critical to understand. There's a national economic crisis going on today. I want to bring that to you. Let's begin. Here we have a quick update with the Federal Reserve, the reverse repo operations. This time, you could see the maturity date on this one is June the 4th, $479 billion. All right, moving on to look at the balance sheet of the Federal Reserve. It has surged once again to a record high, $7.9 trillion. So they have continuously increased this. We knew that this was the direction, but it's still unbelievable to see. So it won't take much longer to get above the $8 trillion mark. And so we will see that. I'll bring you updates on that as I can. Now, I wanted to talk about another factor here, the US dollar, of course. And if you saw the title, you're probably wondering, I thought they already dumped the dollar. I thought Russia had done this 12 times before. Didn't this GPS guy make the same video 14 times already? Well, if you look at the major foreign holders of Treasury securities, I always bring you the source directly from it. As you can see, you're looking at the treasury.gov's website. This brings us the latest data, and you can look at this. If I bring up the highlighter for you to see, this information comes as of May 17th, 2021. That is the latest information, but actually the numbers are from March 2021. This is the newest we got. And if you look down the list, Russia's not there. So when we talked about dumping the dollar, this is in their reserves. We're going to take it a step further today. I will show you what that's all about, but I want to make it clear that they had previously dumped in this case, and now we have something else altogether. Russia cuts dollar holdings from its $119 billion wealth fund amid sanctions. So they are simply going away from it. Whether it is because, they're using it offensively or defensively, the point remains, they're going away. They are really getting off the dollar in every way they possibly can. Holdings shifted to euros, yuan, and gold. Asset transfer to take place within the central bank reserves. So remember that there is multi-level approach to this, and regardless of whether they have a choice here or not, this is what they've done. Russia said it will eliminate the dollar from its oil fund to reduce vulnerability to Western sanctions. And this comes at a time in which, the two leaders are going to be meeting and so on. The National Well-Being Fund will shift its dollar holdings into euros, yuan, and gold. So we have seen Russia consistently over the years. They've been adding to their gold reserves. At the same time, they've been reducing their US treasuries. So we've seen that direction. This is really nothing new, but it takes it a step further. They talk about specifically what happened to the dollar as a result. The dollar is not going to fluctuate because Russia is moving their money out of there. That's obvious. But the long-term trend here is that country after country after country are reducing their holdings of the US dollar. Today, the US dollar as a reserve currency makes up 59%. That is by far the most when you look at it around the world. There's no doubt about it. You compare the other ones, there's 3% and there's 5% and so on. Nothing comes close, but that number is certainly declining. I've shown you that before. The central bank can make these changes to the well-being fund without resorting to market operations. They do get into a little bit more detail, and specifically noting the fact that geopolitics does play a role. We're trying to protect our investments. So like I said, This to me just shows you that they are doing this for a reason. They know what they're doing. They've actively, consistently been doing this over the years. So it's really nothing new. We should have all expected it. And then we talk about China. This article is talking about, the strength of their currency, and the People's Bank of China is getting restive about the strength. And that is something to keep an eye on. Any attempt to prevent it from rallying further would provide fresh fuel for a clash between Beijing and Washington over currency manipulation. If you remember a few years ago, they were talking about labeling China as being a currency manipulator. I think that lasted maybe about a week and a half. And then that, of course, changed. Because the truth is, every single country manipulates their currency. These are open market operations. The Fed's doing it every day. China's doing it every day. They're all doing it. They all manipulate their currency. Now, if one deems it to be a manipulator, and to me, that doesn't matter. That's insignificant, because all central banks around the world are trying to create a level at which they believe is the right thing. At around $6.38 to the US dollar, the yuan is the strongest level since 2018. The currency needs to rise by only a little over 5% to hit a historical high. It rallied by almost 12% the past year already. So things are certainly happening, and they talk more about this, but the point that I want to raise is that you can see China doing business with all other countries as much as possible in their own currency or in bilateral trade, whereby they will use the Russian ruble and they'll use their own currency and they'll do a swap, and they won't use the US dollar. And that to me is very interesting, very different from what we've seen in the past. Okay, let's move on to this right here. Biden floats a minimum 50% minimum corporate tax in talks with the GOP. They brought this up previously. Now it's coming in right here. They want this corporate tax to be global, a global situation. And some might think to themselves, well, this is a good thing because the corporations need to pay their fair share. Hang on, okay? Just hang on. This right here is getting into a little bit further detail. It's out of USA Today. The tweaked proposal would no longer raise the corporate tax rate from 21% to 28%, and essentially saying that they're just going to go with plugging up the loopholes and making them pay at least the 15% minimum. Forcing that to happen. This should be completely acceptable, and they want to keep the 2017 tax law untouched. So you don't touch that tax law, but we're going to want this to happen so that we can make sure that the global overlords are putting everything into place and we don't upset any of them. Forget companies. The global taxman wants the middle class. That's right. The Wall Street Journal actually put some truth out there. Big spending politicians will have to go where the money is, in citizens' purses and wallets. Now, what are we talking about here? It's the corporations that are going to get the higher taxes. That's what they've said, and that's what's going to happen. But it isn't. You will always pay more. You as the individual will always have to pay more. They continuously increase your taxes. They give several examples here in this article. It's going to come in the form of property taxes. It's going to come in the form of gas taxes. It's going to come in the form of higher prices that you pay on just about everything, because those businesses are deemed in some way to have to pay a higher tax. Maybe it's a carbon tax, and maybe who knows. But if you're buying certain food items, well, they might have a tax that was put on that business, and then it transfers onto that product. But the consumer doesn't see that. The middle class doesn't see that. But of course, that's exactly what it is. So let's break this down. Number one, Russia has dumped the US dollar. They've done it through the US treasuries, getting rid of those a while ago. I covered that on the channel, and now they're doing so through their wealth fund. Number 2, as foreign investors get rid of the US dollar and US dollar denominated assets, the Federal Reserve will have to buy them up. Number 3, pressure on the US dollar means that you're going to have a debt issue for once, because all of that consumption going on around the world eating up the US debt isn't going to happen anymore. So watch out. This is extremely important. The job situation is truly important to be taken a look at, and you can see this right now. They're claiming that everything is certainly making progress. The U.S. weekly jobless claims below 400,000. Companies boost hiring in May. They tell you at one point that they don't have enough people to hire, and then they tell you that they boost hiring. You look at the unemployment rate. It's completely completely incompatible with any information that they're giving us. I mean, it's just strange. The Labor Department admitted that the calculation is no longer accurate. I mean, why are they even reporting it? Here's the data on the chart form. By the way, all of these charts that look like this, I'm always pulling this up from tradingeconomics.com. Don't forget to check that out, okay? It's really key. You can just see over the last few weeks and so on that this has been declining over this period, okay? That's what I wanted to highlight. AMC is a stock that's been on the front of basically every financial news website. AMC cashes in on meme stock mania, raising $587 million. They do get into the details here. Obviously, I'm not going to have the time to get into this. That's why I want to do separate videos related to the key indicators that I think some people would be appreciative of. But just looking into it, you can see what's been happening. There's been a big change, because perhaps a positive change, you could argue, but these investors who don't have the technical skill and the knowledge and the history and the experience to know where to put their money, when to put it in and out, they're simply rallying together. And, I think a lot of people will probably end up getting hurt from a lot of these risks that are being taken. But I think the message is there, and it's that people can get together. Forget about AMC, forget about the stock market mania and so on. It's that when there's actually, let's say, a goal that people have in mind, if enough people get behind it, it can happen. And that's the kind of thing that people need to realize. They dominate, those in control dominate everybody, and it doesn't have to be that way. The collective spirit can always overtake anything, but it really requires a lot of energy, a lot of heart. The national eviction ban expires this month, but renters still have protections in these states. So they do get into the full aspect if you want to look it up. But I just think it's important to see what's happening here with this national eviction ban and how that has really staved off a true crisis and put it onto the backs of the landlords. So they're really, to me, showing us that we have multiple levels of the real estate crisis that have been happening that really haven't been coming up to the surface because of all these rules that have been put in place. This right here is lumber, and essentially just saying that there is a ceiling from where it can go. I think it's gone, far beyond that. It didn't make any sense for the prices to be this high when you look at the supply chain in each of those details. I wanted to finish off by taking a look at McDonald's. They're testing an automated drive-through ordering. And what is this? It's basically AI. So you go to order your McDonald's, you go up to the drive-through, and you basically talk to the artificial intelligence. They take your order, and it said right here, it was 85% accurate. if anyone's ever been through a drive-through, I mean, when was the last time I did that? I'm not sure, but you know, this 85% is better. It's probably better than what I've experienced in history. So, I mean, that's not bad. So I think that these type of positions here, I mean, I could see a time in the near future when you would go to a fast food restaurant and there is probably one human being just making sure everything's operating. That's the future, whether we like it or not, I think, and people need to be aware of that. If you haven't signed up for the insiders, you got to do it. And I've got something to entice you. I wrote a PDF, and it's basically what I call the 7 critical tips for financial education. It's 7 simple things. It's 7 pages long. You read this document, you can share that document with your friends, with your family, and it's gonna explain a bunch of things. Some of the things you probably already know, but it's something that you can easily transfer to someone else. It's really short. If you see the way I wrote it, it's extremely easy. If you want to get in on this, just get the insiders at themoneygps.com. When you sign up, if it was set up properly, you should be receiving. Anybody who signs up now will be receiving that PDF when they sign up. So definitely check it out, themoneygps.com. If you found this informative, hit that thumbs up button, and don't forget to check out this video. It's got a lot of information. Check it out, and I'll see you there.